Doge to the moon. Elon Musk tweets. Market readjustment. But is the crypto really worth all the hype? Hey, how's it going, investors? My name is Louis Olivier, and welcome back to the North Investor, where we're all about personal finance on our path to financial freedom. Today, we will see together what is my current point of view on the crypto for the future and what is my personal strategy concerning crypto for my own investment. But first, let's take a look at what is crypto. The first crypto was originally created in 2009 by a programmer or a group of programmers known as Satoshi Nakamoto. This crypto is known all around the world as being the Bitcoin, which nowadays is the crypto that has the most importance in terms of market capitalization, that now worth more than $900 billion, which is actually the equivalent of the Facebook market cap. So that actually proves that Bitcoin is truly a crucial actor into the financial world, which transfer and create a lot of money between the different people. Plus, Bitcoin and Ethereum, which is the second most important crypto in the world, are representing more than 60% of all cryptos in terms of market cap, as you can see over here, which shows that both of these cryptos are truly the two main actors that lead the others smallest coins on the market that is in full expansion since more than 10 years now. Also, cryptocurrencies all have different functions and goals, but they all have a decentralized system. And on the opposite side, banks, for example, all have a centralized system. But what does all of this mean? Well, in fact, when, for example, you put your money into the bank, they will use your fiat money or your cash money to lend it to someone else with some big interest, and in exchange, they will give you some super small interest, and that's a good way for them to do money. For example, they could lend some money to a person that needs it to borrow for its house with a 15% interest, and they will take your money with 0.5% interest. And also with this centralized system, that makes that the bank is the main identity that will be the boss of the system, and that will lead the system. And also sometimes other companies such as Facebook and Google will have access to some of your information and also to your investing profile to be able to use it sometimes against you. And on the other side, with decentralized system with blockchain in the cryptocurrency, for example, it is a system that is fully interconnected together with no single identity, which means that technically you're not giving your money to the banks or to any other identity, but you're keeping it in a system where there is no boss. So you can also do some passive income investment with this crypto investing method by staking your coins. And to stake your coins, basically you need to keep your different coins that you will be staking during a certain limited period of time, for example for 15 days, 30 days, 60 days or 90 days, and in exchange you will receive a reward that can go until 25%, and what I'd say would be the big risk of this way of passive income would be that you can technically lose some value on your coins during the period, because you can't take away your coins that you are stacking. But actually on the long term, it could be a very interesting way to invest for people that are looking and that are trusting the coins in which they are investing. And I would say that obviously crypto can be a way to invest that is pretty new and that could afraid people for many different reasons, but also keep in mind that what is new to people usually always scare them, but it doesn't necessarily mean that it's not necessarily a good path to success. But does it mean that this kind of investment is the best thing to do? Let's first take a look at what makes a good currency. As you might know, for a currency to be considered as a good currency, there are many factors that need to be answered. Some of the main functions of money are distinguished as first, a medium of exchange, which means that the currency need to be globally accepted all around the world as a way to pay, so as a payment method. Secondly, there's also the fact that it needs to be a unit of account, which means that it needs to have a certain and a stable value that won't fluctuate too much in the time. After, it also needs to be considered as a store value, so something that people can be able to exchange between all the different people, which means that it has a certain value. And for example, when there is some hyperinflation and that the market is unpredictable, the investors and the consumers generally will shift to store value like gold, silver, or even real estate to protect themselves. And finally, it could also be considered as a standard of deferred payment. So the fact that the currency needs to have a certain value in the future, and it needs to have this predictable value. So the consumers, I'd say, and the investors need to have trust into it for the future in order to be considered as a good currency. So since the Bretton Woods system from 1944, the American dollar is considered as the global currency on which people rely on when we are in crisis. And since at the beginning money was a debt obligation, it was secured by gold, and the fiat money, or the present money that we know, is actually still supported by gold, and that's why government has enormous big gold reserves in the banks. But now, with the coming of cryptos, there is nothing that secures it except a maze of programming. But the value of the crypto will be 100% given by the investors, because at the moment the government is not there to regulate the crypto market, as I told you. And that means that all the investors, for example, if they want to hold or to buy some cryptos, it will give some value to it. But if they decided to sell it, it will make the value of the crypto decrease. However, compared to the other classic investments strategies such as the stock market or the bonds or even the real estate, the crypto has two big defaults. The first one is actually that there is no regulation on the market. So that means that, for example, the government, as the Chinese government since the past few weeks was trying to say, has all the power concerning the regulation of the market. So if the Chinese market, for example, wanted to ban the crypto into China, actually, well, they will have the power to do that. So they could just say we're banning the crypto, or we are banning Bitcoin, for example, which would make that every Bitcoin holders or every Bitcoin miners into China would lose all their initial investment plus all the profit that they would have done during the period. So that's the big default of it, but it's less likely to happen, I would say, because there's the government doesn't necessarily want to punish the people, but there is still a chance that this could happen. And the second big risk, I would say, to it, because it's not necessarily a default, because it could be a positive thing or even a negative things, is the fact that actually there is a lot of volatility on the market due to the fact actually that the crypto market, compared to, for example, the stock market, where there are some companies behind it, and we know, for example, when I invest into Apple, I know what I am investing into. And there are companies and there are something really solid, and we know what we are investing. On the crypto market, sometimes people are just going with the trend and with the people. So sometimes, for example, Bitcoin and Ethereum, there is something behind it, but it's not as clear as a company. So there are a lot of volatility because it's the people that has the power to make basically the value of a crypto. So the people can decide to, for example, buy the stock and buy the crypto or the coin and hold it, which would make the value of the crypto increase a lot. Or on the upper end, if they wanted to, for example, sell it, they could potentially sell it as well, which would make the crypto lose a lot of its value. So that's the big danger of it. But at the same time, it could be a really positive thing, because if we see it on the other eyes, with another eyes, well, you can potentially do 400% of gain if you're lucky and if you are in the good timing and everything. But if you analyze it and try to see, for example, the traders are trying to do that, but there is a possibility, for example, to do 400% of profit into 3 weeks. But at the same time, you can lose 500% of loss into 1 month. So there is a certain danger, but at the same time, it's to see the risk versus the because it's actually an investing method where there's a high risk, high reward possibility. So it's actually your responsibility to manage it, but there is a certain risk to it, obviously. So that's good to know what is the crypto, but what is actually the mechanic behind it? So let's see it together right now. To make money from it, you can be an investor or a miner. And keep in mind that for the Bitcoin, for example, there are a limited number of Bitcoins that are available for the miners and for the investors, and it's not every Bitcoins that has been mined yet, so there is still some Bitcoins that are available to be mined, but compared to, for example, some other coins such as Doge or even ADA, those coins can create coins with time. And if, for example, there are more buyers than some sellers, well, technically there can be some coins that will be created, which means that, for example, a crypto like Bitcoin will have this certain impact of scarcity compared to some other Bitcoin that doesn't have a limited number of coins. So the miner is the one that will, with a mathematical exercise with his computer, will be able to mine a part, for example, of Bitcoin or any other currencies, while letting his computer do the works 24 hours per day. So he's not really mining the Bitcoin, if you know what I mean. But with time, the mining of with Bitcoin is getting more and more complicated. And when we compare, for example, 2010 with 2020, there is a big impact, and this is due to the fact that nowadays there are more and more people that are mining Bitcoin, so there are more demands compared to the offer. And as I told you, the offers is limited to, for example, for Bitcoin, a number maximum of 21 millions of Bitcoins that is available all around the world. And there are less and less Bitcoins available, and there are more people that are mining it compared to 2010. And back in the days, actually in 2010, 2 pizzas sold for around 10,000 Bitcoins, which would worth actually around $400 million nowadays. So I hope that those 2 pizzas were very good. So personally, concerning my crypto strategy, I decided to not invest into what I call the gamble coins, or for some people, they call it the shit coins. So coins such as Shiba Inu, Dogecoin, or even SafeMoon are, in my personal opinion, coins that I'm not going to invest into because they are too speculative. But if some people want to invest into it, it's okay, and it's perfectly fine depending on their objectives. But to me, it's too much speculative because they are on a joke base. For example, they have been created as a joke first. For example, if we take Dogecoin, that has been talked first into a TV show, if I remember well, first by Elon Musk, and after he just decided to full tweet about that. But personally, I would prefer to invest into some coins that are bigger and that I see a really good future to it. And that's the number one condition if I want to invest into cryptocurrency. I'm going to take a look at what is the cryptocurrency, how it works, and what is the potential into the future. So that's super important. And obviously, I'm always investing in things that I like. That's also the number one, I'd say, advice that I could give to you also. Invest in things that you like. So for example, me personally, I like Bitcoin and Ethereum. So I'm investing into it when I see that there are some dips. But you can invest into other things as well, if depending on your situation as well. So it depends of your risk tolerance and all your time lapse, obviously. So it's your own responsibility to do it. But personally, considering the fact that there is still no big regulation and there's still no big rules by the government, so they still have the power to ban it, for example, and there's a lot of volatility. I want, and I personally aim to stay into the 2%, between 2% and 5% of my total assets into crypto. So that makes that if the crypto goes really well, it's going to have a big impact on my portfolio and it's going to be very positive. But at the same time, if the crypto doesn't go too much well, and even if it goes to zero, I'm not going to lose all my wealth, and I'm still going to be in a very good position by the fact that it's not going to have a big impact on my portfolio, because it's only between 2% and 5% of my asset assessment to it. So that is the thing that I do. Obviously, always verify your investment and always do your research before to do it, because I'm not a financial advisor, obviously. And guys, I want to know, what is your strategy into crypto? So are you investing or not into crypto? Let me know in the comment section. And for those who are new to crypto investing, I would invite you to just come and join the different brokers that they are. I personally use 3 different brokers. One of those is ShakePay, and with ShakePay you can have a free $30 referral by using my link. And what is special with ShakePay basically is that when you shake your phone like that, basically you are having a free, some 100 free Satoshi, which equal to a certain part of Bitcoin. And every day, if you're doing that, it's gonna become a streak. And with this streak, the more it increases, the more you're gaining of Satoshi, until I think it's after 200 days or something like that, when you reach the peak. And when you continue to shake it, it's gonna keep giving you all the different gifts from it. I also use Binance, which is the biggest global broker of cryptocurrencies in the world, with more than 200 different currencies. So Binance also, I'm going to put a referral link into the description. And also there is Newton, that is perfect for all the Canadian investings. I'm going to put a link also into the description, and I think it's a $25 referral link into for Newton. And guys, for everyone that is new to the channel, I invite you to come and join the North family by subscribing to the channel for only $0.0. And you can also come and see my latest video that was on what is my stock strategy and my stock portfolio strategy. So I will highly invite you to go check it out. It's gonna be just right over here, and I will see you there.